If you were an SPX today, you would have made yourself a nice little treasure this afternoon after the FOMC rate hike went up about 11:30. You can see here this huge green candle. You can see that was the effect after that ruling came out. Let's take a look at SPX and what happened today. All right, this is the 15-minute chart, and this is the beginning of the day right here. And I'll tell you what, this morning when I got in and I started watching it and watching what was going to happen, I was kind of just watching just this choppy market up and down, up and down, up and down, up and down, up and down. Not too much movement either way. The numbers weren't just there just to do a quick scalp for me anyway. Maybe it was good for you. That's great, man. But anyway, this whole thing right here, this whole area right here, what I see is nothing but chop. And rule of thumb is never trade on an inside day. So going back to look at the daily, we see on the daily chart here, this was yesterday's candle, which was a 2 to the upside, and I trade with strat, so this is the language. So this 2 to the upside, it broke above the previous day's highs, and it broke about today, it broke at 476.97. Let's just say 40.77 to make it easy. So once it broke that, we knew it was time to possibly get in. So let's go back and look and remember that our key number was 40.77 to clear, to go to the 2 to the upside, to go in this for a long trade. So we'll go back down to the 15-minute chart, and here we go. So when did this break out? Right after the news came out, the rate hike, and what did we have to do? We had a 3. This is a 3 because it went above the previous high and below the previous low. So that's a 3, followed by a 1, which is an inside candle, which it didn't break either side. It tried, but petered out, came down, but it never really went anywhere. So it's a 1. We call that a 1. So you have a 3-1, 3 again because it broke the bottom and then went up. So your time to get in, again, we were looking to break the day's high was 477, right? So we know that 477 was our break, and that was the high on the second candle on the 15-minute chart here. That was the high of the day so far. And then we knew we had to break that to get across and become a 2 to the upside, which would possibly open up a long trade for us. And that's what happened. That's exactly what happened. Once it went past 477, boom, it took off. Again, in here, once you get the next candle forms, set your stop here or somewhere in between, wherever you want. You're in the money. Keep riding the thing up, keep riding the thing up, and then finally you see the red. And you could have possibly held it out to this point, or when you start seeing the wick forming here on this candle, to finish out on a day that was nothing but chop suey. This was just, again, if you're looking at the daily, it is impossible to think that you're going to do a trade, pull a trade off in this range here inside the previous day's candle. Rule of thumb, do not trade on inside days. It'll end up in disaster. You might get lucky. You might get lucky and do a quick scalp here, like when it went down here or whatever, looking on the lower charts. Could you have done something? Let's look at the 5-minute. Even in the 5-minute chart, I mean, look at it. It's just nothing significant, nothing moving. So the best thing to do would have just been wait. I think that's what everybody was doing here, was waiting for the FOMC rule to come out for the rate hike or the whatever they were going to decide to do, but it really doesn't matter. And that's what it's the beauty of this thing with using the strat. Again, we're looking for price action. So no matter what happens, no matter if they would have raised or lowered the interest rate, it doesn't matter because we're watching for actionable signals. We are looking for places to get in. And even on the 5 here, it even looks so much better. We see here this candle here. It is a 3, but it's to the downside. And once we see this shadow on this candle right here forming, and then the next candle going up, we know that it is a possible 2 to the upside, and that is our entry. And sure enough, what happened? That was at 464, but we needed 477. We needed to get past the previous high of this day, and once it hit 477, boom, off to the races. And again, healthy little profit. There was nothing here that told you to sell until you got up here to the top, which right here, which you start seeing this, a 2 up, and then the next 2 on the way down, 2 to the downside. That is a rev strat. That is a signal that tells you you can go short, and you could have went long here, wrote it out, and then turned around and came down short by the end of the day. You could have had 2 trades, 2 winning trades. So that's what today would look like, but it was an excellent example to show you that this is the choppy market, and it comes from an inside day. There's indecision. It will not break above, it will not break below, because there's indecision. And I believe a lot of this was everybody waiting for this time right here for the FOMC. So hopefully, if you got in some trades today, hopefully you were able to really just get in on this price action here. And if you're using the strat, you would have known, because you would have had the actionable signal that would have told you to get in and then when to get out. All right, so hope your day was good. I had a decent day. Could have made more, of course, but hey, we're in it for the long haul. We're not looking for grand slams every time. Base hits, doubles, triples, and maybe a home run every now and then, and that's trading. A lot of times we strike out, but hey, it's a marathon. We're in it day by day. It's not going anywhere, so don't put any pressure on yourself. This is trading, and it's going to happen, and we just do it every day. That's just the beauty of it. So good luck, and I hope everybody's doing well out there. It's been a while, but hey, today was a really fantastic day to learn and to watch what was happening with the market with price action. So we'll catch you next time.